I'll use the word conservative in a narrower, not a political sense, but just the people that want to preserve what we had. I don't think even the conservatives are making a pretense that the debt could be paid. Just the sheer quantity of it divided by the number of productive people, and you end up with what, $350,000, $400,000 per person, per productive person working in the economy. There's no way. On top of their mortgage debt, on top of their auto debt, their credit card debt, their student loan debt, and everything else. There's no way. And so people can see that. And of course, in the rest of the world, the other currencies are even worse. And so, wherever you go, you look at people that are looking for an escape from, paper currencies. And, there is no escape to any other paper currency. There is one escape, and that's gold.
Welcome, everyone. This is David Morgan of themorganreport.com, and today I'm going to interview, or really just have a conversation with Keith Weiner, CEO of Monetary Metals. And Keith and I met actually pretty early. I think once he started his website and started writing, I found him fairly early on. And I remember that first conversation was well over an hour, and it's very seldom that I talk to one person for 1 hour straight. But a lot in common. I want to know what you're doing, and you've kind of broken away from the crowd, so to speak, meaning that you've reintroduced a way for people to invest in gold or reinvest in gold and get a dividend in gold or get a dividend in silver. And this is something unique to the marketplace. You've been doing that for several years now. But before we go down that path, I want to look at the macro view, Keith. And that is, gold has definitely broken out. Took us about 3 or 4 tries to get above the $2,000 US dollar level. And since then, we've zoomed up to about 3,500. We're kind of consolidating between, 3,250 and 3,450 or thereabouts. And what do you see in the gold market going forward? And also, second question, now smart you are, you can take two at once, is why has silver lagged so much? So I'll give it to you. That should take about a half hour with those two questions.
So, first of all, I think we are definitely in a bull market in particularly gold. I'll get to silver as a separate, thing. For the longest time, talking about separating myself from the crowd, I made a lot of enemies. I say enemies, I mean, sort of, not really, but, between 2012 and about 2019, every time there was a blip, all the usual suspects would come out with pictures of rocket ships and moon launches and all these things. And I'm like, look at the data. This is not the breakout you're looking for. And then sure enough, the price would turn back around. And then people said, oh, you're a shill for the Fed. You're making the price go down with your report. And I'm like, what, you got to be kidding. You think I have that much influence? I can make the gold price go down, right? But it just wasn't. That was a market where, if you talk to family offices, 2013, 2014, 2015, 2016, they were still trying to liquidate anything gold that they had, whether it be, mining, other illiquid hedge funds that had some exposure to metals or even commodities. Everybody was just trying to get out, and that took X amount of time to play out. Little did any of us know how long that would take when the price hit its peak in 2011, but I could see it in the data. We follow the market data and publish it every day on our website. And when COVID happened, and that was obviously quite bullish for the price of gold, I said, okay, this is it. This is now a new bull market. This is not the old, sell the blips bear market. This is now a buy the dips bull market. And we had some dips, certainly post the initial COVID reaction, but the whole character of how metal is moving, how it's trading, how the basis moves when the price moves, is different from those long years. Now, of course, anybody who knows me knows that I say it's not gold going up. Gold isn't going anywhere. It's the dollar going down. And so if you're standing on the deck of a ship, which is both sinking slowly and tossing around in big waves on a stormy sea, and you're pointing to the lighthouse, you're like, why is the lighthouse going up and down and mostly up? Lighthouse isn't going anywhere. You're just going down, but you're tossing up and down in the process. But either way you want to call it, whether you want to say gold hit 3,500 or the dollar hit just under 9 milligrams of gold, which is how I prefer to look at it, the trend is real. I don't think it's over by any means. I think we're early innings on this. Unfortunately, because we're watching the ruin of ultimately of America and the dollar. But it's also inevitable and something I've been talking about for about a decade and a half or something. And and the drivers are fairly obvious. The debt is completely out of control. I don't think even I'll use the word conservative in a narrower, not a political sense, but just the people that want to preserve what we had. I don't think even the conservatives are making a pretense that the debt could be paid. Just the sheer quantity of it divided by the number of productive people, and you end up with what, $350,000, $400,000 per person, per productive person working in the economy. There's no way. On top of their mortgage debt, on top of their auto debt, their credit card debt, their student loan debt, and everything else, there's no way. And so people can see that. And of course, in the rest of the world, the other currencies are even worse. And so, wherever you go, you look at people that are looking for an escape from, paper currencies. And, there is no escape to any other paper currency. There is one escape, and that's gold. And that's the thing that people are, sort of blindly, well, and Americans understand gold the least. I really have to say that based on my travels. But even in other countries, they're sort of blindly groping. They think, oh, gold goes up. Let's say in India, they realize the rupee is going down, just like Americans realize the dollar is going down, but then they say gold is going up. But they buy gold out of habit. They buy gold out of religious affinity. They buy gold out of complete and utter, nobody trusts the rupee in India. I mean, even the patriotic Indians don't regard their currency as anything more than a temporary, it's what you use to buy groceries, but they don't regard it as a serious savings vehicle of any kind. And so people turn to gold, and that trend is on. That trend is global. And, different groups will say, oh, well, our people are more price sensitive. It's the Americans that buy on momentum. This last big rally from, let's say the last 8 to 10 months has not been largely American stackers. It hasn't. Right. The first, let's say 8, 10 months ago, the dealers were saying that, volumes were down. They weren't getting people selling, but they weren't getting buyers either. And then as the prices continued to go up, you get people who are selling and taking profits. Partly because maybe they need the money, partly because they think, okay, I'll rotate into something else, partly just because Pavlov, the Fed or the government or something has trained all the people, every time the price of gold blips, don't trust it, it's going to come right back down. And after 17 of those during those long years, everybody's trained, nobody's really believing it. But meanwhile, the price keeps going up despite Americans selling. Okay, who's buying? And I can tell you, it's Chinese, it's Indians, it's Turks, and it's Arabs. And of those, only one of them is really an anti-dollar play. The Chinese are an anti-yuan play. The Indians are definitely an anti-rupee play. The Turks are potentially facing imminent hyperinflation as an anti-lira play for sure. It's the Arabs who have stable currencies that are pegged to the dollar, or as stable as the dollar is anyway. And those pegs, unlike most, let's say, pegs in Latin America, those pegs are actually stable. Nobody in the Middle East is seriously thinking that tomorrow morning their currency is going to be down, 40%, the way it could happen with some peso in Latin America, and yet they're buying gold. And recently they had Ramadan, and it's traditional at the end of Ramadan to buy some gold, and so we lease gold to the jewelers there. A word about that jewelry. Yes, it's ornamental, but it's bullion. It's sold by weight. It's all about buying X amount of gold, and it's sold as basically the gold price plus some making charge markup, which could be 10%, 20%. I've also seen 0% when the store needs to get rid of inventory. And
let's stop you there for a second. I hate to interrupt, but I want to emphasize what you just said, because there are a lot of Americans that don't understand what you just said, that when you are in Dubai and you're buying a gold necklace or bracelet or a ring or whatever, you're basically not paying the 100, 200, 300% markup you get in North America. You're paying basically the weight of gold, and it's in a form that you can wear.
That's right. So last summer, I kind of have regrets. I picked up, so there was a store that advertised 0% making charge. That's what they call the markup for fabrication and profit. And so I went in to see, okay, is this really real? And so I picked up this necklace. Now, everything that looks chunky or heavy, if you go into a store in the US, it's either C-shaped or it's just a hollow tube. That thing was a solid length of gold. It weighed 89.5 grams, just about 3 troy ounces. I mean, I pity the poor woman who has to wear this because
Yeah,
there'd be a bloody welt on the back of her neck. I mean, it was like really heavy. Anyways, when you calculate, you have to convert the dirham to dollars and grams to ounces. I calculated, yeah, it was the spot price of gold. They weren't shitting you. 5% VAT, so you're buying a piece of jewelry for a spot plus 5%. Now that was just because they needed to reduce inventory for a variety of reasons. So anyways, at the end of Ramadan, the price of gold was making then a new record, like every day. And so the market was really concerned, are we going to have buyers this year? The buyers traditionally are price sensitive. They like to buy when the price is down a bit. They don't like to buy record prices. Anyway, they had record volumes. Massive selling volumes occurred at the end of Ramadan this year. And it just tells you that people are serious about loading up on gold as an alternative to fiscal madness, monetary madness, international, politics. Now, in that part of the world, they're certainly very friendly to Americans. I have always felt very welcomed. They respect Americans in business. They seem to love Americans. They respect and love or like America as well. It's not it's not a protest against America as such. But our monetary policy, they get the short end of the stick, and they feel that. And so I think there's partly a protest against that, and partly just a protest against the entire monetary madness of the whole world. I mean, the whole world is in on it. It's not really unique to the U.S. We talk about the U.S. dollar the most because it's the biggest currency and because it's the most transparent. We get the most data, the most news about it. Other currencies are a lot less transparent. But it's a global thing, and so this is what's going on. Is people are looking for alternatives, and gold is the only thing that really is going to work, and nobody really wants that as a monetary. It's one thing to say, okay, buy some jewelry, it's going to hold its value, it's going to go up, whatever people say. It's quite another for governments to say, let's institute any kind of gold-related currency. Nobody, ain't nobody want that yet.
Elaborate on that a little bit, would you? Because, you go back pre-petrodollar, it's my studied belief that the Arabs were not trusting the dollar. They really wanted to trade oil for gold is something they could trust. But Kissinger intervened, and we came out with the petrodollar, and we'll give you protection if you agree to buy in dollars only, and then reinvest all that liquidity into the bond market. But I'm going to go take you too far down the rabbit hole, but come back to what you said, and that was that they're not ready to go gold to gold yet. Why is that, and where do you see that going eventually? Or do you see
there's a disparity between what people want to do with their own finances versus what they advocate politically that they feel is best for society or the country at large or whatever. Nobody, even the sound money movement in America, thinks it's a dollar that's better managed by the Fed. They want the Fed to manage the dollar to be 0% inflation. I wrote a very controversial article that the Sound Money Project actually published. I said, sound money isn't what you think it is. And I said, suppose you're the president of the chairman of the central bank, and the president of the country says to you, I want you to have a policy of 0% inflation, no deflation, no inflation. I just want consumer prices to hold steady. Now, the reality is that every productive enterprise in every industry is constantly, relentlessly becoming more efficient. That is, they're producing more with less, which would tend to mean a falling general price structure. And so what you'd have to do is somehow contrive to devalue the currency at an equivalent rate to what industry is increasing productivity. So if industry is becoming 2% more efficient every year, you'd have to devalue the dollar every year by 2% so that prices would hold steady. I said, supposing this is possible, which it isn't, would you call this sound money? And I said, now, by way of example, and I had who was the painter for Norman Rockwell, who did the paintings for the Saturday Evening Post.
Right.
And there's a very famous one called The Double Ride. And it shows this woman, she's buying a chicken at the butcher shop, and she's got her finger under you got the scale hanging on the chain, right? And she's pushing underneath to lighten the reading a little bit. And meanwhile, and the butcher can't see that because the chicken is blocking his sight line to her finger. And then meanwhile, he's got his finger pushing down from the top, and she can't see that because there's a big fold of butcher paper blocking her view. I said, suppose both of those forces, her finger and his finger, happened to turn out to be equal at that moment, and that the reading was actually what the weight of the chicken is. Would you call that an honest measure of the weight of the chicken? Of course not. Right. So, but that's what the sound money movement wants. If they want a dollar that's better managed, almost nobody, aside from we ragtag few Austrians and some of the libertarians, so not the Cato Institute libertarians, but more like the Mises libertarians, would advocate gold, of course. But we're a tiny number. I mean, a fraction of 1% of the country, right? So, but what we're seeing at Monetary Metals is people are quite happy to open accounts. We don't ask our customers their political views. It's not appropriate. It's not necessary. But I'd imagine a lot of our customers would not necessarily advocate a gold standard, for the nation to adopt. But when it comes to protecting their own wealth personally, they see a good thing, and that's what they want to do. And so it's the same thing globally. Do they want to advocate that Saudi Arabia or UAE or anybody adopt a gold standard? No, I don't think anybody's ready to go there. That would be a political hot potato. But when it comes to owning gold personally versus currency, oh yeah, everybody. It's ubiquitous in that part of the world, whereas in America, I would say less than, and you might have a better statistic than me, less than 1% of Americans, I think, own any gold. And half of those, they probably inherited a coin, a couple of coins from their grandfather, and they just haven't either had the heart to sell it because granddaddy said, keep this is important, or they don't really know where to sell it because they're not, so
Right.
it's just in the coin drawer along with the disused keys from 3 houses ago and 2 cars ago, and there's a gold coin or something rattling around in there. Very few people have any serious, part of their portfolio in gold. Certainly a fraction of 1%, and that's how the world is wired today. And you can't get change overnight. Now, obviously, things happen, and people, all of a sudden the crowd will move. But they'll move in response to a crisis. They'll move in response to some big news event. There's no amount. One thing I've kind of come to realize, there's no magic words that I possess. I could write an article, give a talk, and then move people to change their views of the stuff. Not going to happen.
Yeah.
So you end up preaching to the converted or to the choir, or doing what you do. But the world is inexorably moving towards this. The currency systems are failing. Most people who would agree with that statement would say that, yes, hyperinflation is imminent, whereas I actually think that we're headed towards another collapse in interest rates because there's no capacity to service debt at this interest rate. We've driven it down for so long that all the marginal borrowing has only been possible and enabled and subsidized, or whatever you want to call it, by zero interest rates. And in order for rates to go up and stay up and continue to rise, you have to have somebody who keeps bidding it up. And there is nobody in that position other than the federal government, but they're not big enough to move the entire bond market like that. The rest of the corporations are trying to figure out how to shrink their balance sheets, not borrow more. And so I think we're going to go back to zero and beyond, and zero interest rates just crush the savers, obviously drive rampant asset price, rising, rampant asset speculation, all kinds of non-productive malinvestment kinds of activities. And they really squeeze young people. If you don't own a house, you can't get one because you can't save your wages to accumulate enough to get a house because the price of houses under a zero interest rate regime are going up faster than your savings. You're not getting any compounded interest on your savings, and the house is compounding. So you're just cut out. And now, if I can go into my little rant on that, you said half an hour, and I'm sort of jokingly consuming that half an hour. My little rant on that is that the left has the correct observation here. We'll call it the Thomas Piketty left, to some degree Elizabeth Warren, which is that there is a growing disparity, an unjust disparity between the owners of assets, and especially those who can own assets with leverage, and also those whose income comes from asset prices, which will be bankers and CEOs. There's a growing disparity between that group versus people that work for wages. And jobs and wages get crushed under a falling interest rate regime. There's a downward pressure. And so that's the observation, and it's correct. Now, the left makes the wrong diagnosis. I think this is capitalism causing this. Sorry, the central bank is Communist Manifesto, plank number 5, is no part of capitalism. And therefore their prescription is wrong, it's evil, which is let's have a wealth tax. Let's just confiscate everything that we say you don't need. Let's just take it away, which will only make things worse, of course. The right, in an attempt to head the left off at the pass, denies the observation. They also agree we have capitalism, which we don't, but they say everything's fine because, look, we have iPhones and we have Amazon Sunday delivery, both of which are true. But if you're young and working, you can't save for retirement, you can't save for a house. But yeah, you can have enough money to have a place that you rent, and some clothes and some food, and go out for drinks with your coworkers a couple times a week. And yeah, you have an iPhone, and you buy your stuff on Amazon and it comes on Sunday. And of course the right also agrees with capitalism, and then the right, their prescription is, well, just let's have some austerity. Actually, that's not even true anymore. I don't think even the right is saying let's cut spending anymore. I think we tried Doge, that didn't work, and I think we're just on to $3 trillion deficits as far as the eye can see. And let's keep the status quo. And so this sucks. This is not working for the vast majority of people. Nobody sees a way out. Nobody wants gold yet. And that's the thing that we have to work to change the perception.
I don't want to put too big a time constraint on you, Keith, but there is one. So the next question, we're going to skip silver for now, is you getting so involved in gold. The debt issue obviously mathematically cannot be paid back, but it's also compounding. Do you see, let me back up. Jim Poplava did a study one summer years ago, and he looked at every inflation / hyperinflation he could find. And his conclusion was that there's never been a non-backed currency that didn't result in a hyperinflation. I've maintained that we wouldn't see a true hyperinflation with the US dollar because the bond market really mitigates that to some level. If you don't trust the dollar, you demand a higher interest rate, which is a little different than what you said a moment ago. And therefore, anytime interest rates rise, you're taking you're deflationary, basically. If you have $1,000 bond and you bought it at 0.5% interest rate, and interest rates are at 10%, if you have to sell it, you're going to have to discount that bond till it yields 10% and take whatever the math is, $600 for that $1,000 face value, and take a loss on it. So my point is, where do you see this ending, or I think you'll agree with me. There is an end somewhere, yes, but I'm not sure yet. I wrote 2 months ago. I wrote about a potential hyperinflationary, and then I talked about a debt spiral, and we could go into a debt spiral. So anyway, you're a deep thinker. What are your thoughts?
So probably one of my, if not the most important thing I've written, one of them, uh, which I wrote in was this 2010 or 2011? When gold backwardation becomes permanent. And I argue for this is how it ends. And so for me, it's not about the quantity of dollars. And that's why you don't necessarily see, as the dollar is clearly turning more and more to shit. It was once gold, and now it's turning to something brown and stinky. It doesn't necessarily mean skyrocketing consumer prices all during the process. That's the thing that frustrates so many people is, the massive inflation that everybody's been predicting for a long, long time just isn't really, yeah, we had some with the response to COVID, because they locked down the supply chain. You couldn't import the goods, and now with tariffs, same thing may happen. But yeah, there is a finite terminus, and the finite terminus is if you borrow and you can't repay, there's a point at which the creditors repudiate the debt. Now, there is no way to express that from within the dollar. You can't hold dollars and not finance the debt. There is no way to say, I want higher interest rates. You've been disenfranchised. That was the real meaning of the 1933 edict by President Roosevelt. Yes, he confiscated some gold. Yes, I'm sure that pleased him. He's a socialist looter. But the real meaning was to take away gold as a channel for people to, withdraw from the banking system.
Right.
Once you take that away, everyone has got to have a bank account or at least a paper dollar. Paper dollar says Federal Reserve note. Guess what? You're giving credit to the Fed, who's giving the credit to the government and the banks. You can't opt out if you want to hold a money balance. Now, he also made gold illegal to possess. Today, it is legal. And so if you buy gold, you're personally opting out of that loop, but your dollars are being paid to the seller of the gold, who's then opting back in. So nothing changes economically. The banking system updates the name on the record, and life goes on. But there is an end, and that's when, we're not there yet, when people are willing to completely repudiate the dollar. And what will happen is the price of gold in the spot market will be skyrocketing. The price of gold in the futures market, less so.
Mm-hmm.
Yeah, I think it'll be skyrocketing also, at least initially, but not as much. And so you'll get an inversion of that spread. The futures price should be above the spot price. We'll get to a point where that's not the case. And what that means is people don't trust the debtor. They don't trust the obligor. So a gold futures contract is an obligation of the bank to deliver gold. And if the spread is inverted, if gold is backwardated, that means that I can give you my gold bar. I don't know if you can see that on the screen. This is not gold, it's just a phone, but I give you the gold bar. I get a piece of paper in exchange that says you're going to give me back my gold bar in a month or two. And I pocket a profit. And I'm taking no margin call risk or any other kind of, conventional risk. This is deemed to be a risk-free trade,
Right.
by the mainstream system. And when gold goes into backwardation, which it's done intermittently since 2008, and once when Gordon Brown was selling half the UK's gold, 20 years ago, 25 years ago, when gold goes into backwardation, that's people saying, I don't trust it. And even though I can get a risk-free profit by giving up my gold bar and getting a piece of paper saying I'll get it back, I don't trust it because there is a risk. And the risk is that that piece of paper is not going to be honored. And now, that's not imminent. That's not tomorrow. That's not next month, I don't think. But eventually we'll get to that point. And it's really, this is the perversity of the whole thing. The decision to, to end the dollar and end the whole system is in the hands only of the gold owners. Nobody else gets a vote. If you have gold, you have a vote. Nobody else does. And when all the gold owners pull their bid on the dollar, that's it. The dollar goes no bid, and that's what permanent backwardation is. So everybody should read that article. It's scary, but I think that's the mechanism. And at the end, prices will hyperinflate. People will call it hyperinflation, but it's nothing to do with the quantity of dollars. It has to do with the decline in its quality when it gets to the point where gold owners just say, I'm not participating anymore. And that's probably still a number of years out. And I have to hedge when I say words like probably, because every day I'm astonished at just how more destructive the new policies are versus the old ones. COVID and the lockdown being a great example of that. Tariffs now just being insanely destructive, and destructive to debtors. Don't forget, every business around the world has incurred debt, largely in dollars. And then if you can't export goods to the US, you can't get dollars to service your debt. That's really bad for the banking system. And when the banking system is toppling over, that's when gold will go into permanent backwardation. So dangerous stuff. I don't think we're there yet. I like a quote from Adam Smith where he says, because the context was, you have all these ruinous policies, why is the nation not ruined yet? And he says, well, there's a great deal of ruin in a nation. It takes more than you think. They have more aces up their sleeve than you can, imagine. But eventually, yes, it is finite, and you get to the end. It's not just rising prices, which could go on forever. It's declining, capital backing the whole system, and then when you run out, horrible things happen.
Well, let's go ahead and wrap it up there. Tell our viewers where they can get a hold of Monetary Metals and what the what services you offer, and maybe just allude to maybe one or two of your ventures that you're working on currently.
So we pay interest on gold and silver in gold and silver. We do that by leasing metal to companies that have a physical gold inventory, like jewelers. We just had a press release today for a Middle Eastern jeweler called Tajvi. We have a lot more that we've done, no announcements yet, and we have a lot more coming. We also do gold loans to companies that have a gold income, such as mining companies, although there'll be industrials as well. We did a loan to a company in your backyard last year called Bunker Hill in northern Idaho. That was a little over a million ounce silver loan. And we're paying a 12% coupon on that in silver to the investors. Now the leases are open to everybody. The loans we parcel out as a securities offering that we call bond, gold bond or silver bond. That's accredited investors only. People can come to monetary-metals with an S.com, and they can follow me on Twitter at RealKeithWeiner.
Well, one last thing. Is there anything you'd like to summarize or reemphasize before we close out, Keith?
I guess I'd say the economy is a lot worse than it looks. Be really careful out there in whatever you're investing in, and that includes precious metals. But be careful with real estate, be careful with stocks, be careful with anything that is tied to leverage. All the other, even if you're not buying it with leverage, most of the other investors out there are.
Well said. Well, thank you for your time. Enjoy London. Oh, wave at the Queen for me. I should say Queen, King. No Queen.
King Charles now, that's right.
Yeah. So I'll leave it there. Thank you again.
Thank you.